Hey guys, welcome back to Climate Insiders for season 2. We have an amazing list of guests, and we're kicking things off with Benjamin Joffe, a partner at SOSV, a global deep tech fund with 1,000 portfolio companies and $1.3 billion in asset under management. They focus on early stage planetary and human health. They invest the very first checks at pre-seed via the startup program HAX in hard tech, Indie Bio in biology, Orbit in frontier markets, and D-Lab in blockchain. Benjamin started in an investing role in the HAX program in Shenzhen and then quickly moved to work on the non-investing role across the portfolio. He's been an active angel investor, a super speaker and moderator in hundreds of events globally, and he's now the curator at SOSV Climate Tech Summit, which happens to be every year a virtual event, generally in October. We'll speak in length about it. Benjamin has a lot of insights to share on this episode. We will cover his views on the climate tech ecosystem in Europe and in Asia, the role of SOSV in climate tech. They happen to be the most active climate tech investor globally, and even touch on building your personal brand in today's noisy social media era. Let's jump right into it. Benjamin, welcome to Climate Insiders.
Thanks for having me, Jan.
Could you briefly describe SOSV for those that don't know you? Fund size, geography, ticket size?
Absolutely. So SOSV is a global deep tech fund focused on early stage. We particularly focus on climate tech and health tech globally. The last fund we raised was close to $300 million. We have now over $1.3 billion under management. And we invest in about 100 or so new startups every year. And we invest via our startup programs in hard tech and biology. So the hard tech program is called HAX, and the biology program is called Indie Bio.
And you were founded, I read that the founding year was 1994 in Princeton, New Jersey, and the name comes from its founder, Sean O'Sullivan. And so SOSV derives from Sean O'Sullivan Ventures. Is he still involved today?
Absolutely. He's signing all the checks post programs for all the companies. And in the early years, he actually used to meet every single founder, even at the very, very early stages. So you're right. The fund started as a family office created by Sean. Sean is an entrepreneur. He IPO'd a company that he created out of university. He's been a successful investor and entrepreneur since then. And in '95 was very much still him and a checkbook. That gradually evolved to turning into more classical VC fund. In 2015 was the first time we actually welcomed external LPs. And 2019, Sean became finally a minority LP in the fund, making it more like a more classical VC fund.
Who backs SOSV today? I'm curious to know where those 1.3 billion under management come from. If you can say so, is that government money, large corporates, or money laundering?
Well, I was about to say all of the above, except I was a bit fast thinking so. But it's most. So we're still kind of a fairly new fund if you consider that the first classic VC structure, majority LP, was in 2019. So the type of backers for this type of fund is typically family offices, high net worth, and corporates. So for corporates, there's a lot of strategic alignment with the areas of focus we have. And for high net worth and family offices, they're interested in the risk-adjusted returns that a diversified portfolio like ours provide.
And today, SOSV is enormous. You're more than 400 employees, dozens of programs, accelerators, and funds. How do you keep this all together under the same umbrella? And how, can you paint us a picture of how many partners you are? How is this structured internally?
Okay, yeah, I'll correct a bit the numbers because we're not 400 people. We are about 130 full-time at the moment.
Okay.
But there's a lot of
LinkedIn
ex-employees because over the past decade, there's been a lot of people going through the fund at different positions. In terms of programs, we did operate a number of different programs, but today the two major programs we operate are the ones I mentioned, the HAX program for hard tech Indie Bio for biology. We have another one focused on emerging markets, on software, that's called Orbit, as well as a small kind of pilot program for blockchain. So there's not that many programs we have run. But over the years, we did try several others, and we decided to focus on the most promising ones. You asked about the number of GPs and partners. So we have 12 GPs as of today, and so spread out around the world. So as you said, the fund is registered as a Princeton-based fund because that's where Sean lives and is based. But actually, our offices are quite spread out. Our biggest offices are in San Francisco, New York, Shanghai, and Shenzhen, and we have other branches in different places. Personally, I'm based in Lisbon after having been based in the Shenzhen office for several years.
And I'm going to poke a little bit. Historically, you've invested in, you mentioned blockchain companies and even an infamous, correct me if I'm wrong, but the infamous crypto exchange BitMEX. And why did you suddenly decide to get into climate?
Well, it's more kind of, actually the journey has been a little bit different from that. Actually, the climate journey started way earlier with investments in companies like Jump Bikes, for example, which was acquired by Uber, one of the early players in micromobility. So we were the lead investors in the Series A and the largest shareholder at the acquisition. So actually, the climate investment started way earlier. The company you mentioned, BitMEX, is more, I would say, an anomaly in the portfolio, but came from our cross-border market investments. And so it did go through some legal challenges because of I'd say, the enthusiasm in crypto that led to maybe less than optimal KYC at some point. But it's all sorted out now, and the company is still doing extremely well. It's actually one of the top performing companies in the portfolio. Yeah. But it's really not the focus of today. So climate across all the kind of the big five, so transportation, energy, food and ag, industry, and buildings is really what we focus on now.
And that's a good segue to your role today. And SOSV now organizes an annual climate tech virtual event called the SOSV Climate Tech Summit, which will take place this year on October 25th, 26th, so coming up very soon. The lineup looks great, with some of the world's most renowned funds, some of the most prominent journalists. I highly recommend attending, by the way. The summit aims to spread information and foster connections within the climate ecosystem. How does that work exactly? How do you make this all work virtually?
Yeah, so the idea of the Climate Summit came last year when we decided to be more communicate more about our climate portfolio. So we've made probably close to 200 investments in climate tech since we started. We publish now every 6 months an update of our top 100 most promising companies. And we thought that there's a lot of tech events out there, but there's not really a single event that tries to bring together startups and investors in climate from all around the world. It's very difficult to do this offline, especially with COVID and all that's happening around that. So we thought, okay, well, how about we try to do something online and virtual and try to bring the interesting voices among like new VCs, established VCs, as well as startups. So last year we had founders representing 9 climate tech unicorns. This year, I think we have about 5. And like last year, we had speakers like Bill Gates, Vinod Khosla, Tony Fadell. And this year, we changed entirely the lineup to have new voices. And the idea is to inform, inspire, and help people connect. So this event also, I should mention, is a free event that we organize to support the community. And I think for us, the idea is to connect better and to help people connect better, to increase the chances of success of startups, inspire founders who might want to start climate tech companies, to help them understand what's the journey ahead and how to avoid mistakes and how to make things better. And on the investment side, we have now over 1,000 investors sign up for the event this year, and many of them haven't necessarily done a lot of climate deals and are trying to reinforce and inform their playbook going forward. So that's also the purpose of this event.
And I was looking at the lineup. It still remains U.S. heavy. I'm assuming it's just a history of the event. Do you see, as the event evolves, a better balance between continents, the three continents that you're most present, U.S., Europe, and China? How is this going to play out?
Yeah. So we try to bring some diversity, geographic diversity, to the event. It happens so that the most active and largest companies and funds are still based in the US. We do put some effort, though, in inviting both startups and funds from other geographies. So we have a few funds from Europe. We have World Fund, who's speaking this year, for instance. And we've invited a number of Europe-based startups. But it's true that, there's talent everywhere, but in terms of access to resources, access to capital, visibility, it's not equally distributed. Even in Asia, like, we were hoping to have somebody talk about China, and we're looking at identifying a specialized climate fund that could maybe give us an overview of what's going on in China. And we couldn't just find a good fund to do that. We had some conversations, but some were hesitant to speak because they don't feel like sharing the information. And there are just not as many funds yet that are active in places like Asia. Now, we, among the kind of the perspectives we bring, we did invite a fund from Singapore called Gen Zero. That's part of Temasek. Mm-hmm. It's a global decarbonization fund. It's actually really large, about $3.6 billion. And just this morning, I was actually talking with the minister for the sustainability and the environment from Singapore, which, because Singapore has a very interesting, unique position as a country, that it's a tropical island with very limited resources for both food and energy and industry. And they're trying to decarbonize everything and to, reach some level of security or independence in all those three fields.
They also want to, from the last couple of months, have sent a clear signal to gain exposure to European climate tech. So Temasek, the government fund, is really looking to support European funders and funds. I see this year, 2022, as really an uptick. So you mentioned the heavy historical part balance towards the US. Have you seen this rebalancing happening this year from your chair?
Yeah, there's a lot more climate funds that have started all around the world. There's a number of them in Europe that are very interesting, and a number of unique initiatives. The difficulty, I think, for when you organize a global event is that you're limited also by the time and available space you have. We're hosting about 20 different sessions. Probably 1/3 are VC related, 1/3 are more tech and startups, and a few on policy, and even a science fiction writer, Neil Stevenson, who's speaking there. So when you try to balance things, we're trying to figure out what are the most interesting companies that could benefit as many people as possible. There's also a question of availability. Like, there's some speakers we're hoping to have that either were not available or not keen on speaking for various reasons. But we're working on it, and hopefully we'll have more and more diverse voice.
And I wanted to bounce on your look. We have the privilege to have you having worked extensively in Shenzhen in China, and SOSV having a big footprint in Asia. Could you paint us a picture of the interactions you see in the climate tech space between China and Europe specifically? On the deal side, on the expansion of European startups, on government funds from Asia trying to invest in Europe. What do you see, and where is this going in the next few years?
Well, you're asking a very kind of broad question here, but I can tell from our perspective. So we're looking at deals all over the world. Like, it doesn't matter where the company's from. If the tech is good, the team is good, we'll invest. So in recent years, though, we've done mostly investments in. So Singapore is actually punching really above its weight for us. Then we've done quite a number of deals in India and Pakistan, but it's more like general kind of internet deals rather than climate deals, even though there's a few emerging ones. China is a bit tricky to invest in as a US fund because of geopolitics. So that doesn't help. Even for Chinese investors trying to invest abroad, there's also more and more restrictions in the US or Europe. So that also doesn't help. But we see talent coming out of China. We see talent, Chinese talent abroad. And if we look at other Asian geographies, there's also really interesting things going on in the classic developed Asian nations such as Japan and South Korea that have kind of a larger scale. But they tend to be less visible for foreign investors, and it's harder to access their deal flow there.
And in terms of specifically for funds, clearly Europe has a policy advantage, right? Governments are aware of what they need to do. They have clear targets for 2030. We see things picking up again in the US and accelerating.
That's right.
What about China and Asia specifically? Is the climate conversation already mature? Is it changing? Where is it today?
So I think for Asia, it really depends who you're talking to. If you're talking to China, China is one of the very few countries that can actually make really long-term plans and actually stick to them and deliver. So they have plans to decarbonize by 2030, by 2060. They have different goals and targets, and like all indicators seem to point to the idea that they're actually going to achieve those targets. China is deploying more renewable energy than anybody else. They're deploying more EVs than anybody else. So there's also a large amount of venture capital that's deployed in China to support early stage startups from private funds and government funds. So China is kind of its own thing. Now, other countries, I mentioned Singapore earlier, they also have long-term goals, long-term plans, and even though they have a democratic system, it still allows for making those plans kind of historically because of the initial foundation of Singapore and on how they thrived. For other countries, it depends. So Japan seems to be really keen on things like hydrogen, but in terms of other initiatives, I haven't really seen like very, very strong policies. I haven't really looked in detail at it. But then if you look at emerging Asia, places like India, Pakistan, Thailand, Vietnam, Indonesia, very different picture you have to paint there. In most of those countries, the population is still growing. They still want to grow GDP fast. They're still trying to achieve what we would call like a modern Western standard of lifestyle, standard of living. So if you look at the consequences in terms of carbon emissions, obviously that means that's going to go up. And it's not so easy to, at the same time, green your energy mix or make your industries more optimized. So I think, unfortunately, there's not that many tech solutions that are targeting emerging markets in Asia or South America or Africa that take that into account. So I still have hope. I think that there will be more and more solutions for that. And hopefully, when they modernize and when they establish new infrastructures, they will go for the green solution first. A little bit like, many emerging markets had their first telecom line through mobile.
Right, leaping over
through mobile.
That's right.
Yeah.
And I wanted to go back to SOSV's role in this global picture, this global chessboard. You play a role in acceleration, right, through your different programs. You also do direct investments. What about you personally? Are you more involved on advocating, event organizing, representation, or also on the investment side? And how do you structure geographically your investment scope?
Yes. So personally, my role is kind of across. So I help generate deal flow. I help connect with the ecosystem, investors, media. As you mentioned, I also participate actively in the organization of annual events and other initiatives. Also, I need to clarify that the fund that always invests the first check through the programs we run. So we don't do direct investment really outside of that. But the programs are the first check really of a long series of checks that we hope to sign for those companies. And we deploy about 20% of the fund at the program level and 80% in follow-on. So the first check is typically $250,000 to $500,000. And later on, we can invest several million, like up to 5 or more per company.
Interesting. Good to know. So no direct investment, 20% of it funneled through the different programs
Yes.
of acceleration, and 80% in reserve for follow-on.
That's right.
You've also played personally a great role in thought leadership as a keynote speaker, moderator, panelist. You've played a direct role in more than 300 events across 35 countries. So let's mention some of those events: TechCrunch Disrupt, Slush, Hello Tomorrow, South by Southwest, Le Web. So you've been all over the place. Is taking part in all those events and building a personal brand a must to spread ideas further, or are there other ways that you've explored to contribute?
So I think that there's kind of different aspects to participating in events. When you're a relatively new fund or you have a new thesis, you need to achieve some level of visibility to generate your deal flow. So very kind of self-serving manner, you can ask yourself the question, how I'm going to get the best deal flow as I can, because you cannot have better results than what the quality of your deal flow provides. So we took the decision to try to give visibility to our approach and share the knowledge we had around hardware, hard tech, biology, climate tech, and also health tech that we also do. So it's one approach. Some other funds have other ways to get visible, but I think fundamentally we believe that paying it forward works, that if you explain what you do, if you provide some level of transparency, if you show that you know what you're talking about, people will, benefit from it. And even, they might not necessarily work with you or want an investment from you. You might still be kind of top of mind in your field. So I think that was partly what motivated our sharing.
So it's really building a brand as a fund, and there's always a balance between fund representation and personal representation, where building a personal brand today carries more. We see that on social media than corporate brand. Do you advise all the funds, the wannabe funds or the funds that are newcomers, to do more event representation and to be more visible, or on the contrary, better to nail their stuff, their sectors, become true experts, and put a blog post out occasionally? What's the best use of your time personally, but also as an ecosystem player?
I wouldn't be prescriptive of the right way to do things. I think it really depends of which sector you're in and what kind of people work at your fund. If you have somebody who really likes to write and collects a lot of ideas and likes to share, let them write and encourage them to write and find outlets either on your own blog or maybe as a guest author on other media. In the early years of SOSV, I published probably 24 long-form columns on TechCrunch to explain what we're doing and share ideas of things we've learned. So I think that helped at the time. We published also a number of presentations and slideshows that were viewed by hundreds of thousands of people. So that can be a way to do it. You're doing a podcast. I think that's also a great way to get visibility and to learn and share. And so that, there's new platforms all the time, but fundamentally, I think it has to fit the personality of the people running the fund. Ideally, I think it's very difficult to speak in a kind of anonymous voice of a corporation. There's also some really established funds that really don't care about any type of representation of visibility. You can think of Sequoia, for example. They typically don't talk too much because they've been around for so long. They're so well known. But for new entrants, definitely you need to do something to have some visibility. And that could be, podcasts, articles, presentations, public speaking. Frankly, on the one hand, it has benefits, but on the other, I almost consider it kind of the studio audience to test ideas. And if you think that a presentation that you can do in front of, let's say a few hundred people, you can put online and get it potentially in front of thousands or hundreds of thousands of people. The idea of the offline is like a TV studio. It's not necessarily the final destination, like the final crowd for your message. And also ideas evolve, like something that starts maybe as a just a few ideas on Twitter could be you can turn maybe later into a presentation, later into an article, later into a report, later into, I don't know, some video you would put online. The challenge is to find distribution. It's not just to create content. How are you going to reach people, and how are you going to get them interested with something unique and valuable?
I wanted to double click on this. This is interesting from my perspective, and I'm sure for many. We live in a noisy, social media driven environment today where there's a lot of vanity metrics, the follows, likes, and so forth and so on. Is this a natural path to get access to the best deals? Or is there a better, more qualitative way to really get in the mind of entrepreneurs that are on especially deep tech hardware, working on really complex solutions, to have a more direct approach?
It depends who you target. For instance, if you think of a postdoc or PhD currently in a new university, maybe they don't read TechCrunch. Maybe they never heard of TechCrunch. So the question is, what do they read? What might they see? What might they search online when they're thinking about starting a company? If you can show up in those results, then you're doing the right thing. If you can find ways to reach out to them, maybe through LinkedIn or some whatever other channels you have, or some relationships with those universities, maybe you don't, that's maybe the most relevant. We work a lot with first-time founders, and for us, it's really important that they know we exist at that time, because if they already move on to raise a seed round, it will be probably too late for us to work with them. So for that, we work with trying to make them aware in different ways through discussing with labs, encouraging our organizing some offline events sometimes to invite PhDs, researchers, or engineers, or people who are thinking about the domains we cover. I think there's really a variety of strategies. There's no one solution for everything. It really depends on what your goals are.
And if the goal is to attract the best deals, I wanted to get SOSV's opinion on software versus hardware when it comes to what drives maximum returns financially, but also impact footprint. Any strong opinion there?
Well, we have kind of a view on that. It's not so much in terms of returns, it's in terms of what we decided to focus on and why. So we focus on solutions that have a physical component through biology or through hardware. We decided to do something that everybody thought was really hard because we thought it could be impactful and provide great returns, and was also less competitive because seen as more difficult. If you do, if you're one VC doing SaaS solution like everyone else, you're basically a little bit anonymous. You work with the same metrics, you have the same playbook, you're not really potentially that differentiated. Whereas if you're able to support, like in our case, with experts on staff, with labs that we have built, companies to go from lab to an advanced prototype and potentially to market, it makes a huge difference. And in addition, if you think about, climate, there's just so much you can do with software. You can probably optimize some processes, you can measure stuff. But at the end of the day, if you really want to change something in the physical world, you have to be able to interact with the physical world. And that means, some kind of hardware, some kind of new technology that has a physical component. You cannot do software food, for instance.
That's right. I would totally concur on that front. There's also a recurring theme here. It's differentiation as a fund, and it seems like you're very thoughtful about how to differentiate on the crowded ecosystem to compete for the best deals. There's a voice, building a brand, but also building access to the technology very early stage. It is the name of the game, I'm assuming, and you've been around for decades already investing. Differentiation. You don't want to be prescriptive. Do you have any insights or opinion to share with upcoming funds? Is it what is the key of differentiation today? Is it really nailing one particular area, becoming more and more specific, or is it more of a geographical anchor?
I think it can be a mix of things, but it's something that sets you apart. You could say, okay, we're the best, biotech fund in the Nordics, for example. or we are super specialists at everything. I was about to say enterprise SaaS, but let's talk climate. Let's say we're super specialized with like we know really well materials. We do global deals on materials. Those are like ways to differentiate. Obviously, geography is also an important differentiation. Some funds get really good access because of their presence and their connections in a particular geography. Our choice has been to be very early stage at a very risky stage, heavy on providing resources with labs and experts and capital at a time where founders have a really hard time to find those. That has been our way. The jury is still out there. That's actually going to be like the best way, or a great way. Because most of the companies we invested in are still pretty young. But yeah, I think that works. It's all about being thoughtful about your positioning and how you articulate it to what audience.
Indeed, it's all about a thoughtful differentiation. I want you to jump into a rapid fire round. So the concept is simple. I'm going to give you two options, A or B. You give us your choice and just briefly, in one sentence, explain why. Are you okay?
Sure.
Great. So first question is, helping your portfolio or picking the founders. What is SOSV better at? So you're focused on the first check. What drives success is very much the quality of the founders, or is the resources that you're providing through your acceleration program?
Well, it all starts with the founders. If you don't find a great team, whatever resources you throw at them is not going to solve that. So it starts with the founders.
Contrarian versus consensus. Looking back, which bet paid the biggest dividends so far? Investing in contrarian ideas or more consensus? Okay.
So in our case, it's not because people thought they were bad ideas. It's mostly because people thought they were difficult or sometimes close to impossible. Like, we're one of the first investors in alternative proteins. We've done deals in companies like Upside Foods, Perfect Day, Notco, that are all three unicorns today. But 7 years ago, when Upside Foods said, "Okay, we're going to grow a hamburger in the lab," people look at them. Nobody wanted to give them money. So it's not like, I'd say those have really paid off pretty well. On the hard tech front, we've done a lot of robotics deals. One company in the robotics portfolio we invested in about 7-8 years ago just raised a big 70 million round for robots that can clean commercial spaces. So, you have to have a bit of patience for this type of deals. And I mean, this one, and we have another one that was very successful doing automation for biotech labs, a company called Opentrons, that turned into a unicorn last year. So, and again, at the time, people were like, "Oh, why would you do like a robots for biotech that are, desktop size?" Like, people just couldn't understand what was the market for it. But it turned out that there was a pretty big one.
Next question is talking about events, virtual versus physical events. What is the best to stimulate connections and spread information? Did you land in any
Spread
direction?
Information online is the best. Make connections offline is the best. We're trying to do things online for making new connections, but I think it's just that it's very hard to replace yet the
shaking hands.
Shaking hands, spending time, the ability to introduce also friends of friends, of connections of connections. I was recently in a kind of a few days retreat organized by a company a fund called Voyagers. They were bringing together about 50, 60 people in climate tech over 3 days, doing some activities and getting to know each other. And you cannot do that online. It's just impossible.
Can you tell us more? I'm actually curious about this summit. Is it fund managers? Is it true experts?
It was a mix of people.
Close circle?
That you can check that on voyagers.io and see what kind of activities they provide. But it's a fund that's basically community driven, and they understand that to foster community, you need to get actually people physically together.
Okay, sure. Yeah, you're mentioning David Rowan's Voyagers community, and
That's right.
they do a side event. We were going to link everything in the show note. I'm personally part of this community. I haven't attended any of the physical events yet, but I certainly intend to in future. And last question is really SOSV's vision of the future and how to scale a franchise. Is it better to build an enormous fund, a core fund, or to build 20 smaller dedicated funds? So what do you advise to newcomer funds as they grow in AUM is to continue raising the roof on their core fund or create a family of smaller specialized funds?
So our strategy is to still focus on a core fund. We're not planning to scale it to very large size. I think, the size of the fund has to be dimensioned for the type of things you do. Our focus is first checked at pre-seed. There's a question of volume, of quality pre-seed companies in all categories that kind of dictate the optimal size for us. I think if you start to fragment your fund and do all kinds of things, it's a diversification strategy. I'm not sure how well the sum of the parts is bigger than the independent, entities. But I guess they could be attempted. I haven't seen it work that well so far.
And to conclude this show, for people that would love to work for a great climate tech startup or even for a climate tech fund, where would you advise them to start?
So if they want to work with our portfolio, there's a lot of jobs published on the job section on our website across the entire portfolio. For climate tech funds, fortunately, there's more and more funds that are popping up all around the world. I think last year there were more like 60 or 70 new climate tech funds. Mm-hmm. So those are looking for talent at all levels. There's more and more climate tech companies also all around the world. There's some sources of information that are quite good for all of that. Like one is the Climate Tech VC newsletter that publishes really good information. There's a number of databases you can find listing various climate funds and climate tech companies. So I think those are good starting points. In addition to that, because more and more people want to work in climate, there's even companies that have been or organizations that have been set up to help people make that transition, that career transition. So you have organizations like Work on Climate and a few others that help you with that. So there's at least 3 or 4 that are quite reputable.
Yeah, thanks for the pointers. We'll link everything in the show notes. I've also personally written an article about to help people do that. So we will link all this. Thanks so much, Benjamin, for this wide-ranging conversation. It's been fun.
Thank you, Johan. Thanks for having me, and wishing your podcast and all the climate enthusiasts the best in the coming years.
Thanks so much, and thanks to all of you. Thanks for tuning in.